Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. We've been having a good time here talking about the financial markets, the do's, the don'ts, and how to make smart investing decisions. Congratulations to those who that did text in for that free investing class here at Online Trading Academy. You took that first step to whatever that goal or objective that you have to have that opportunity to reach that. If you missed it, make sure to text the word investing to the number 210 right now for 2 seats for the investing class. Text investing to the number 210 for 2 seats for this class. These are during the week and on the weekends. They're only about 2 hours to get started down the right path for your financial future. So, Al, we were having a good time on the last segment talking about retirement strategies, whether you need to protect it, grow it. Now, let's talk a little bit about, let's just say somebody is nearing retirement or has retired, and they still excuse me, they still need an income strategy
hmm
to maybe offset some of the income or the outflow that they have. So maybe they have a little bit of Social Security, a little bit of a retirement account, but they still need that short-term income strategy. What are some of the things that you help people start down a path for to be able to have that income strategy and then be able to have those retirement accounts last longer?
Sure. The good news, folks, is this: that if you don't have a large retirement account that you hope that you would have to help you get through your retirement years doing what you want to do, that's okay, because we think the most important thing isn't the size of that retirement account, it's how much income you can generate off of it. Use it as an income generator instead of here's what Wall Street does. Even in retirement, they're still keeping you in what basically is a long-term strategy. You're in that buy and hold strategy. They're not concentrating on profits. We show you how to take a profit when it's there so you can benefit from it. They're not concentrating on protection. Think about this: your 401ks, your 403bs. In the year 2022, most of you lost about 25% of your assets in those accounts. How were you protected? Well, you weren't, but you listened to the advice of Wall Street and you still lost money. So the three things that we really concentrate on when we talk to you about your retirement accounts, the first thing, number one, is protection. And by the way, that's the number one thing. Even if you're 20 years old and you start to invest, every professional trader, every successful trader out there will tell you the number one thing they concentrate on is not losing. They know they're going to lose. Everybody's going to lose at some point in time. But what they do is they concentrate on how to make sure any loss, any potential loss, is a small one. So when you go into retirement, whatever you have put aside, you want to make sure it stays with you, that you have protection. If you had, let's go back a few years, and let's say you retired in the year 2007. In that following year, the end of 2007 through the beginning of 2009, the S&P 500 was down 57%. Most retirement account investments, if you're in mutual funds or ETFs, most of them really try to mimic the S&P 500 returns. So you probably lost more than half of what you had. How would you like to go into your first year of retirement losing half of what you had? That's why you have to, or maybe it was in your first year, second year, or before you retired, but that significantly changes the lifestyle you have in retirement. So protection is number one. And then how to generate income. What most people have to do when they retire is look at the amount of money they have in their accounts, and then how do I draw the money out of there? What's the best way for me to pull the money out? And that is important. But if you know how to generate income, use that as a income generator, as I mentioned, then all you need to worry about are whatever the minimum required distributions are. And then instead of dwindling down your retirement assets, you learn to generate income off of them. And then the third one is growth. How do you grow that? So there's got to be some kind of market participation. But the great thing with what we show you, the assets we teach you how to trade for income, allows you to take a small amount of your retirement money. Because a lot of people, as soon as they retire, they get very, very protective of their retirement money, and they don't want to take on any risk or very little risk.
True.
And the problem there is that by doing that, you're never going to build your retirement accounts to last maybe another 20 or 30 years. But you don't have to take large amounts of money. I mentioned earlier that the leveraged assets allow you to take a small amount, just a small portion of your retirement accounts, and then you can control something that's worth maybe 20 or 50 or 100 times that amount using these assets with protection. So those are the three components. And the problem now is that people are they're really encouraged to put money into an account. Those are the employer-sponsored retirement plans like 401ks, 403bs, where maybe if you're lucky, and only if the market goes up, are you maybe going to get 4 to 6%. But every time there is a correction, 10% or a bear market down 20% or more, you're 100% exposed to that. And those are things you cannot let happen in retirement. So the way that you are taught and what you're encouraged to do is put money in something that isn't necessarily going to give you the best returns, not going to provide protection, even after the match, if your employer matches part of what you put in, which by the way is free money, which you have to take advantage of. But after that, instead of putting more money into that, you can easily set up a self-directed IRA, a self-directed retirement account where there are no fees, and you can invest in things like options and futures in the foreign exchange market. You can benefit in up markets, down markets, sideways markets. You can have protection. A lot of the things that you are not, you don't have access to in your 401k or 403b. But these are the things that we talk about in these classes.
Yeah, that's a pretty cool comment there because let's break this down for a second. So Al's talking about being able to take a smaller amount of capital, which means you can control much more than it's actually worth. So you don't have to use your whole retirement account. So here's an example. Let's just say an investor has, let's just say $200,000 and they just retired and they feel they're going to have enough, which we know that $200,000 is not going to last very long in these days. So if that same investor that has that $200,000 wants to have an income strategy, what I was saying is don't take that whole $200,000 and put it in the market. That's what the brokers, advisors, they will do that. That's what they will do, which means very, very risky. 100% in the market. So you take participation in a negative way as markets go down. So maybe let's just say an investor that has that 200,000 maybe takes 5 or 10,000 and puts that into a futures account or a Forex account because you have buying power. So you don't need to use that whole thing. You just take a small portion of that. I think most people would be comfortable taking what's $5,000 of $200,000, 0.1%, or I don't even. I'm terrible at math.
See, I didn't have to even come up with it. You did it on your own.
Exactly. Yeah. So you're taking a small portion of that to have the opportunity to do something with it, to have an income strategy. So take a small portion of what you have and put in the market. Always have to have proper capital management. Small risk, high reward, and have that opportunity to have that income strategy during retirement, just so you don't draw down that 200,000 with this example as the investor. So we all know that 200,000 isn't enough to retire, but people are trying to do that, so they're getting second jobs. Why not have the opportunity to use the market, and then use the market to as your quote unquote, income strategy or job, quote unquote. Now, do you have to do it every single day, all day long? No, you dictate your strategy based on the time frame that you use. And that's what we'll illustrate and talk through in these investing classes is how to use your money wisely, efficiently, but also how to use your time wisely, efficiently. So we have these investing classes I want to invite you to. Text the word investing to the number 210 right now for 2 seats for this investing class. Text investing to the number 210 for 2 seats for that investing class, local here in Bloomington. You're going to get a link to text or a link to pick your own date. Also, I just want to cover real quick here, Al, with the conditioning. You're talking, people don't want to take on additional risk at retirement time. Now, it's not taking on risk. It's embracing an opportunity, because if you don't have, and risk is a scary word for some people. If you don't do things a little bit differently, you're always going to be at that point where you're going to be like, honey, I wish we would have done something different. Honey, we should have tried this. Honey, we should have did that. So it's taking that small amount of capital to have the opportunity to do something with it. And we help people that come into these investing classes. We introduce you to concepts so you're not taking that risk. You're actually embracing an opportunity. We give you the opportunities of different assets, whether it's options, futures, or Forex, to use less capital and be efficient with your dollars so it's more comfortable. And I think that's, one of those 3 C's, Al, that we talk about a lot. People want to
Mhm.
have consistency. They want to be comfortable doing that. And then all they need is better choices, especially at retirement time. And you've talked about a lot of these techniques and concepts on the show here today and brought these different opportunities for people and a lot of tips and tricks. Let's hear today's OTA tip of the week.
Well, look, we want you to remember this. In life, you have the power to create the reality that you want. The problem is that we've been conditioned to think that we have to settle. We have to be okay with being average. What the truth is, you don't and you shouldn't. You have the right to be different. You have the right to stand out. You have the right to be the bigger version of yourself, to accomplish more. Dreams only come true if you work hard enough and follow your vision. So look, you might be just one decision away from a totally different life. Maybe that decision is just to attend a free 2-hour class.
I like that. You were just kind of talking about we have the rights to do certain things, and you just made me think about a great song. You have the right to party. I know you remember that song. Great song, Al. And that's the great thing about the financial markets is we have the rights to do what we want in there, make smart investing decisions because it's all about having a little party. Make sure to come into one of these investing classes at Online Trading Academy by texting the word investing to the number 210 for 2 seats for this class. You get a link in a text that you'll get right back. Click that link to pick the date that works best for you. Text investing to the number 210. As always, same time, same place next week. Until then, retire young, my friend.